Good turnaround Tuesday, everyone. Hi, Richard. Ingmar, how are you? Turnaround Tuesday, right?
Morning, Dale.
So, hey, Ryan, how are you, buddy? So, yen's getting a little bounce today.
Yep.
Maybe this was it down here. I like the pound for turnaround Tuesday short. So, you know, it tried one more high yesterday. We could end up with a reversal day in cable.
Yeah, I've just been stopped on a break attempt. I tried this morning when we broke through that 136 level.
Yeah, so no follow through there. And EG, I know it hasn't done anything yet, but it's trying. Maybe we get some type of reversal day here as well. That's a nice looking candle, and the divergence is glaring going all the way back here. Can you guys that are here see this? Hi, Jatine.
Yep.
You know, December 21st before Christmas, and here we are grinding it out. This is a 4-hour TF. And if this is for real and turning, then anytime you think the dollar is going to rally, cable's your preferred short. Okay. And if you're bearish a dollar, then think it's going to fall, euro's your preferred long. So this could be important if it's, you know, you can't say it's a trend, but if it begins to be one, that's going to be how it could be for 2022. Getting a little bounce in gold and silver. I still don't think that the lows are in. I still think that there's a grand prize under 2140 in silver and gold as well. Still think there's a shot for us to, you know, have one more flush. This could be a failing rally, and we head towards this area right in here, 1730-ish, 1720. And maybe that happens around the same time if the dollar could ever break out of this prison it's in. This is called a prisoner formation. You guys ever seen this? Who's been to jail? Give me a Y. I knew no one would say yes. How about you, Ryan? You ever? What do they call it in the UK?
Porridge. Doing porridge. Doing porridge.
I thought you eat porridge anyway.
Yeah, that's what they serve you.
Yeah. Oh God. Yeah. Oh yeah. I visited. Yeah, that counts. That's a nice thing to do. Visit the sick and the prisoners. So
there's a few Ys going up there now. A few ex-cons on board.
Yeah, and you know, anyway, you have to have a little bit of larceny in your personality to be a trader, don't you?
Yeah.
Anyway, so Aussie still looks heavy. You know, unless it could get back over 73, still looks like it could break. And I don't know. I'm not impressed. It would. You know what? I have to tip my hat. And guys, this is why you need to join. All right. So we were down here in the S&Ps. And Blake called it out to the attention of the room, and that it was a very important technical level right here at the low. That was one hell of a, you know, squeezy rally there yesterday. And if you weren't in our chat rooms, you didn't know it. He didn't talk about it in F.A.C.E. You know why? Because it happened after F.A.C.E. So a lot of things that happen in the markets don't happen in this 30-minute time frame when we're batting the ball around, and then we have a guest for the next 30. So you're missing stuff, and you're not going to get better prices than you're going to get right now.
I was going to mention that too. You know, it's a fantastic showcase for community trading, because a lot of people got on that yesterday. Yeah.
So I mean, you got to be in there to be there for the good times. You have to be there all the time, and
you know, and in the trade.
How about if you're in great, and you know, how about if you're not in there, but you come in and you know, I know when I would go in, I'd check out posts, past posts, see what's going on.
Yeah.
So it's there for you.
Well, I wasn't on it, but you know, as I say, there's one thing. The next best thing to making money yourself is seeing good people make money.
Yeah.
You know, elsewhere.
It's great. I think it's as good or better. I've taught some people I actually like seeing them outperform me. Some people might, they get my teachings and can execute them better than me because they have a better psychological type framework. I'm a little bit emotional.
Yeah.
And, I also kind of get too close to things, to trades. My best trades are when I walk away from my platform.
Yeah.
You know what I mean? So,
but that's the benefit of community, isn't it?
Yeah.
That's where you pick up, if you trade a certain way and you have these inconsistencies or these, I won't call them disabilities, but you know what I mean? You know where they're there. And when you see communities doing it, and when you see other people, how they get over such things, then, it emboldens you in your trading, I think.
Yeah, I think almost everyone has some type of chip in their armor.
Yeah.
Problem with their paradigm that they came into trading with that, goes back to their childhood. If you come from like scarcity, say you watch your family always struggle, I think you're going to have a tendency to, when you have quick profits, take them.
Yeah.
Because you come from that scarcity. Anyway, I wonder, I know
we should do a show on that. We should do a show on that.
Yeah, it really, that's why there are, some trading coaches that go all the way back to figure out what's pushing. Some people feel they don't deserve success. If they do, they destroy themselves in the market.
Yeah.
So anyway, anyone interested in my psychiatric services, you can email me at boop, boop, boo, boop, boop, boo.
How comfy's your couch?
the Forex psychiatrist. So, Stell, you around? Came in around?
Dale.
Hey, how are you, man?
Ryan, hey, everybody.
Morning, mate.
Turnaround Tuesday.
Hello.
Yeah.
Dale, Ryan, Stell, and everybody.
So apparently Turnaround Tuesday happened on Monday. That's what Mark Chandler wrote, and I really like that.
Yeah, that's good. Yeah, it did.
Yeah, but we're still, clearly markets today are a little bit more buoyant. And actually, looking at NASDAQ yesterday, it was down 2.5% at some point and ended the day down 0.5% or something like that. That's practically green on the day. And now it's up that amount. So net 2 days, it's flat. And, the market is buoyant, and I'm finding it a little bit difficult to be bullish at these levels. I mean, we had Bostic today saying, yes, I'm very much on board with the March rate hike and things should be done quicker. And this is a very consistent message we're getting from the Fed. Now, the question is, will they actually be able to do it? And the market is probably just thinking, yeah, we don't believe you, or yeah, you're going to start again like in 2018 and you're going to just stop at some point because of the market's going to react negatively to it, and you're not going to go through with it. That could be something that the market's thinking. I don't get it. Yields are going higher, and theoretically, this should be putting downward pressure on bonds and equities. Bonds obviously are retreating a little bit. So yes, yields are going higher on treasuries. But equities are just not doing anything. In the grand scheme of things, last move of the last few days is just a blip. So I'm still watching, and I have almost no equity exposure. I'm still long miners and that uranium ETF, but otherwise I have nothing on equities, and I'm nothing on bonds either. Because,
look, they're right here, Stell, if you see my screen and right at support.
TLT, yeah.
And shorter term, we're starting to diverge. So, we could get a pop. I'm not saying that it's going to be, a great addition, but this was a pretty big break in a month. Okay, so
yes,
maybe we recover here to here, but the big picture is still, very negative on 20-year paper. But it is reaching a point where, if it's going to hold, maybe Paul says something today. What do you guys think? I mean, even though he's in this renomination process, I think he's going to make a comment. Is the market hoping he'll make a comment?
It's the risk. We had the bulk of the text out. We had all the text out from the testimony last night, which didn't offer us much. So it's going to be down to the questions. and how we respond to those questions. And you know, a lot of the questions we get from these government guys and girls are not, they're not usually very monetary policy orientated. It's all about, you know, inequality or, you know, the effects on the economy and for people. But you know, we've had snippets before, so that's the risk, and we'll watch it and get bored after about 3 hours of it.
Yeah.
And now they can grill him on insider trading as well.
Yeah. I think that the show's going to be Elizabeth Warren if she's up and speaking.
It's going to be awful.
Get the popcorn out for that one.
Yeah. I don't want to cheer everyone up. Just noticed a video by Gunlich. He's very pessimistic about America. And he's another guy saying that we're going to hit a tipping point and the dollar's going to take a huge hit because of twin deficits. But I mean, I've been hearing that since the 70s. And you know what? The dollar has taken a pretty good hit from the 70s. You know, we just get used to the hit and different levels. But, you know, I'm paying more for everything. I think, you know, a lot of it, everyone is. I think a lot of it has to do with the dollar decay over the years. But I guess the finale's coming up here, a lot of people think. So what do you think came in yesterday's pullback in the yen, recovery today?
Well, I have a little theory because now it appears that the move in the euro Swiss back up from low 103s to 105 is after all due to the S&B, and so it makes sense to have seen these kind of moves in the yen and even in Canada and in euro. Yesterday morning, we had this drop in euro yen. We had the drop in euro dollar. We had a drop in euro Canada. We had a drop of an initial drop as well in the euro sterling, and that is exactly what the S&B would be doing because they are holding, let's say, 40-45% in each dollars and euros, and then a bunch of other currencies, mainly yen, sterling, and then the rest is smaller. But it frames really well within the move that we have seen yesterday. Euro yen got a hit, euro dollar got a hit all of a sudden. Came off 30-40 points, but once they stopped doing this, then we gradually came back, and we're back at levels in the euro yen where we were yesterday morning. We're back at levels in the euro Canada where we were yesterday morning, and we are virtually back in dollar yen.
Yeah, looking for new highs here on the yen crosses. Cable looks.
If Powell doesn't say anything, or if well, not specifically today, but in the upcoming weeks. We have the FOMC at the end of the month. If they don't say anything really that is going to hurt risk too much, besides scaling back on QE and etc. Yeah, dollar yen, or at least the dollar yen can continue to go higher. I'm still relatively bullish. Dollars are all in all. And still waiting for that famous inflection point where some of the countries who have been putting on so much more dollar debt during the pandemic that they get a bit nervous about where they are going to get the liquidity to fund it all.
Yeah, you're talking about emerging market debt.
Emerging markets, but yeah, and emerging and less emerging markets. Look at China. They were supposedly going out of all the dollars, and their dollar reserves are going up. How do we explain that?
I don't know. I'm sure that's something that G doesn't want people to talk. You better be careful. Anyway,
I think what we also need. Sorry, Dale.
Oh no, go ahead.
I think what we also need to be careful with Powell. It's not what he may say; it's what he may not say. I think there's a few in the market who are perhaps looking for him to dial down on all these expectations that have grown around the Fed. So it can be a case where if he doesn't actually say anything, that's a green light for the market. You know, sometimes you see the market pause into these big events, and if nothing comes out that knocks the expectations or knocks the theme, that's when we see prices kicking on. You know, might see yields bounce again, might see the dollar bounce again, just because he hasn't said anything to knock back those expectations.
Yeah. Hey, good morning, guys. How are you?
Morning, Blake.
Hey, Cap.
Hey, what's happening? You know, I heard you talking about, you know, what we can expect out of the Fed today. Let's remember this is a hearing, and he's the FOMC chair, and he's going up for his job for a renomination. And so let's not forget who he's sitting in front of. He will be sitting in front of politicians. And what is the number one fear what is the number one thing that every politician sitting there on that panel, what's their constituents' biggest concern right now?
Inflation, bro.
Inflation, right? Inflation expectations. So let's think about, like, what is he going to say regarding long-term inflation expectations? Because that's what's going to be asked. Like, he's going to be asked that a lot. And, you know, everybody's going to be like, inflation. And he's got to be the one. This has to either, you know, say, you know, he's going to talk about how bad, how, you know, people misinterpret him with transitory. They're going to be, you know, talking about how he missed the mark completely. And, you know, and then they're going to really grill him on long-term inflation expectations. Right. So that is going to be what he's dealing with today. And I think that's where we're going to, you know, it's going to be about jobs, you know, okay, well, inflation expectations. All right. You were wrong. And, you know, obviously inflation is very hot. So is this going to continue for a long time? And are all these jobs that we're creating, that you're creating, that, you know, the Fed is supporting, are their wages are going to be able to keep up with inflation? You know, and I think those are going to be the questions that are going to be asked, and those are going to be the hard ones for him to answer. Do you guys disagree there?
No, I don't. And I don't. I'd like to ask him the questions: how do higher interest rates address the inflation problem with wages going up? How do higher interest rates affect that in any way?
Yeah, I mean, and then you're gonna have the question on rates. I mean, he's gonna have his hands full today.
He'll be grilled, yeah.
He's gonna be grilled, and so, you know, he's gonna have to be. That's why the market's being bid up right now, because the risk is that he's gonna get beat up, and he's gonna have to respond more dovishly. And so because of that, you got equities that have bounced aggressively, and you know, we did bounce off a really key support yesterday.
Talked about it, how all the people in the room, you saw that area, Blake. I don't know if you heard my opening, but
no,
that people have to, you know, the reason they didn't know about it, because not everything happens during F.A.C.E. It's a half an hour of analysis, and that was, I think, an hour or so after F.A.C.E. when
and to be honest, I thought that actually the 618 was going to hold. I was thinking that the 4640 level was going to hold us for support, but you know, the thing is about the stock market, and the thing about what we. And this is one other thing I should point out regarding the equity markets. Don't forget what happened this weekend. I know today's Tuesday, but remember, there's a lot of week left in this week, right? And don't forget what happened at the end of the week last week. This I don't want you to ignore this. This is why I actually played the equity markets long yesterday, but I already got out, and I got out premature too. You know, I only took like, I don't know, 20 points off the S&P. I nailed that low. I should have just put my stop at break even and just kind of hung with it. But I honestly don't believe that this is done.
Like in the bottom.
Yeah. Like I think you have to sell into rallies. And so this rally, I'm looking to sell into it. Actually, I'm like, just give me another like 30 S&P points here, and I'll be selling into it. You can see we're almost, you know, done filling the gap. Actually, I believe we're going to fill the gap this morning. But overall, the S&P just hit some pretty key support, and that's going to have to hold for the bulls. And you know, you can see this. I'm really I was talking to Bill Baruch yesterday of Blue Line Futures. He's great. You know, I love Bill. for a lot of reasons, but the number one reason is he's not just a commodity broker out of Chicago. He trades, and we talk shop off camera. We talk a lot of trading, like, hey man, what are you going to do here? What are you going to, if this happens? And we're both like, man, if the S&P gives up 4,500, I'm going to turn outright bearish. And, we were both having that conversation yesterday. His interview will be out here shortly. And he was out, or shortly, probably within the next 24 hours. He was buying crypto yesterday. Anyway, we were just talking about how important this level is going into the next, couple of weeks and this 4,500 level. And this is where, if the S&P starts trading down here below 4,500, that's when you're making, lower lows. And then that's when the shift of having an uptrend is kind of out the door. Then, now you're in more of a range and shifting towards a bearish trend. So that's what we got to be careful of. But yesterday, when we were down here below 4,600, yeah, I was a buyer down here. I mean, it was a confluence of a lot of support. And you had to think about today. Well, the Fed chairman's going to be, he's going to be grilled. And so now that he's going to be, he's going to be grilled, he's going to be on the defensive. His risk is he's going to play more dovish. But I think the market's already, got that one figured out as of yesterday. So, what we do today and how the market responds today is going to be really interesting. So what are you guys' thoughts? I'm sorry, I came in a little bit late. I heard K-Man, I heard Ryan, Stellius. I heard Stellius in here. What are you guys thinking, with the Fed here?
Not much more than what I think we've said already. There's as you say, there's some expectation that he might dial down on these expectations, or he could conversely, and Cami says that in the comments as well. If he has to show that he's willing to fight inflation, that's going to be seen as hawkish. So there's two-way risk here. I think
is there anything that's sticking out for you guys? Because for me, let me just ask you, Ryan, in particular. For me, one of the things that I'm keenly watching here is I'm going to be watching, obviously, precious metals, which happen to be range bound. But gold is in my opinion right in the middle of the range. This is actually the tradable range right here. You have the 618 retracement up here at 1830. You have really key support at 1760, and we happen to be smack dab in the middle of that range. A breakout here would really kind of give me a better idea what to do, because like the dollar's in a really tight trading range. I mean, this is the week ahead chart, but you guys can see nothing's changed here. The same euro dollar chart that I've been looking at.
I call it the prisoner formation.
It's a what?
Prisoner formation.
Prisoner formation. It pretty much is. You feel like
it's jail, man.
You're like in jail, yeah. Like you're in Euro jail. But the thing I have to point out is it's not bouncing. I mean, it's bouncing. I mean, it's stabilizing. But God, if I was a Euro bull, I'd be a little concerned here. And you guys were talking about the cable, because I did pop. I was here right at the very beginning. The cable's at the top of its resistance zone. We've been talking a lot about that. That's previous support right here back in August. In September, there's another low over here in November. There's another high right here in November. And then we're just tagging the upper end of this, what I've been considering the resistance zone for the last few days. And so the cable's, knocking its head up against resistance. The euro can't move anywhere. Heaven forbid there's, a dollar bull run right now, because I've talked to a lot of traders out there, and a lot of traders are very, very bearish dollars right now, because they think
they're early. They're early.
I think they are early. I do believe that. I actually think that the dollar's got another leg left in it. That doesn't mean that I think the dollar's going to all-time highs, but I think the dollar's, still in an uptrend, and I still think we could see 98 pretty easily. So anyway, but you know, you got the euro consolidating, the cables had a nice bounce, it's stalling. And so between that and, you know, what gold's doing, and hell, you look at the dollar yen and that doesn't look like it's backing off at all. And matter of fact, K-Man was here a little bit earlier.
Yeah,
K-Man, you have any
talked
opinions about currencies?
Yeah, that's what I was saying earlier. I think part of the yen move yesterday is S&P related, because they after all seem to really are responsible for this move in Euro Swiss. So if you look at their diversification policy, they would have sold euros versus all the Euro Swiss they buy. They sell pieces versus the dollar, and then other currencies such as yen, sterling, and Canada apparently as well. So that explains part of yesterday's move, which if you look at it after the fact, we are back to where we opened the dollar yen yesterday. We are back at this 115.5, and I think that we are in ranges with the dollar yen, with the dollar at as you were saying, at the top end of its range, but it's kind of rangy to me, and I'm seeing that in the S&P, for instance, as well. If we manage to get back up into the 47s and a half, that'll be the second time since the end of the year that we managed to do this range. Yeah, at the end of the year, the S&P was just below 4600, went down to mid 45s, and then from there had the sharp bounce, and now we are holding that trend line again just below 46, and we can maybe make it back up to 47, 40, 47 and a half perhaps.
Oh, I would give Stelios's left nut to get back up at 47 and a half to short it. Sorry,
yeah,
Stell.
but I don't know if you really want to short it. What?
Oh, I would. Oh, that's for me. That is a setup galore. And like I said, I'm going to give Stelios's left nut and right nut too.
I will only first of all, you don't do anything with my nuts, but anyway, I will only short this if we break below 4,500, which means that yields will have gone higher, which means that the Fed is continuing and you know, powering along, and the market starts to believe
confirmation.
Let's talk about yield. So I mean, yeah, I don't know if you guys have talked a lot about, you know, yields. Here's the thing about the 10-year, and if you were, you know, with ForexAnalytix yesterday, you got notified when we were at the 161% extension. The divergent relative strength on the 4-hour chart was very, very glaring yesterday on bonds. Huge support down here on the 10-year. I mean, 161% extension of this move, but go on the weekly chart and just take a real quick look. 2017, 2019, right here. I mean, it's really, really critical. We are in between fibs on an annual basis, but we are horizontal, big support for bonds. And if we break down, I mean, if we break down through these lows, and I was telling everybody in the chat room yesterday, I said, hey, if you're bullish equities, you need the 10-year to stabilize here. And it did. I mean, we stabilized, we bounced, and, you know, we're consolidating, but I'm not 100% convinced that we're you know, yields are going down from here. So what do you guys think about, obviously it's probably has more to do with Powell, but what do you guys think about bonds and yields at these levels?
I think it's the same as we've been saying for a few days, you know, like we spoke about with NFP. You know, when you get events, you look at the levels. Unless the news coming out is game changing, you're going to stay in the range. You know, we've had that move up to 1.8 in the 10s, hasn't held or hasn't broken properly, hasn't held a break, slipped back again. You know, that sets the marker. You know, if Powell says something that you know really gives the market a green light on hawkishness or the rate path, then you expect that to break. And that's how we judge what he says. You know, if he says something hawkish, but we can't break these levels, if dollar yen can't get back up to 116, you know, on something that's just as hawkish, that's when you got to start questioning: are we priced in and all this? Is the Fed priced in?
Yeah. Well, you know, here the thing is you look at like the 10-year yield. We've had this this triangle set up for forever and a day. And like I was saying last week, I was watching one of the episodes of Real Vision, and they were looking at the same, trend line. And it's so the reason why I point that out is because I know you guys have all seen it over the last, couple months. We've been looking at this triangle developing and we're breaking out, but it's not just us. It's a lot of people are looking at this. And that's the point. The point is a lot of people are seeing this move in yields, and that you could get some follow through here, especially as Ryan says, the damn levels, you get above 180 and on the 10-year, and you start to see, bonds, another leg lower in the bond market. That is going to be a risk, a headwind for equities in 2022, in my opinion. All right, well, guys, I'm gonna let Dale take over for his interview.
Yeah, Eileen with us today.
I don't know. Are you asking me?
No, I'm just telling.
Cool. Well, Kathy's here, so you guys are going to be in really, really good hands. She's awesome, and she's been around the markets for a long, long time. But I want to thank Ryan, Stelios, K-Man for being here today, and Dale. Thank you for being here as always.
All right, thank you, buddy. Thank you, team. Thanks for batting
everybody.
the ball around before the interview. Appreciate it. And Kathy, welcome back to F.A.C.E.
Hi everyone. I'm glad to be back. Guys.
Yeah, I know. Gosh, you have to be multitask, trader, mother, everything going on, getting the kids off. And if you could share your screen, Kathy, it's that little green box, and we could talk about what you're thinking in current market conditions. You see that green box?
Just give me a second. I just want to make sure I'm sharing my screen and not just the browser. Okay. Yes.
All right. Okay. So, Kathy, the world changed in a New York minute or a New York week with risk to risk off. The market woke up to finally believe that yields were headed higher. How are you handling this risk off environment? Do you think that the worm has turned and perhaps S&Ps are now don't buy the dip but sell the rip?
Well, I've been looking for a correction in stocks for quite some time as the market kind of built up expectations for policy normalization globally. It took a very long time for that to happen. Yeah. And, I've been wrong for a very long time. But
I remember your last interview, you were very cautious about the market. And, that was pretty near the end stage. We had that big short squeeze in December, at the end of December, that just gave it all up. So now things are manifesting. What do you do are you advising people to try the short side if we get a rally, maybe back to 47.40? Is the yen giving you any messages that this 116 level that we hit last week, that rates may take a pause, or go ahead?
My style of trading is that we establish a fundamental view, and then we let the market tell us when it's ready to move in that direction. So at the very beginning of the week, with the whole sell-off that we had yesterday, we made a lot of money selling the yen crosses, and there were easy trades. Yesterday morning, actually I didn't post on Twitter because I was busy, but basically yesterday morning we had gone short dollar yen. And we had gone short dollar yen. We had gone short. Let me check my blotter. It's
Euro yen, Aussie yen.
Then no, let me get to the real trades. Yeah, so we went short dollar yen, we went short Kiwi yen, and we went short Euro yen. So basically what we were looking for, the easiest trades were really the ones in Euro yen and Kiwi yen, because we got the beautiful zip sell signal. What you're looking at, for those of you that have not seen my charts on Twitter or are not a BK Forex member, this is our custom charts that we trade off of every single day. And they're very easy to read. Basically when we've got a the candle crossing below the indicator line. The background is red, confirming a longer term downtrend. That's a sell signal. When we have, like right now, where the candle is crossing above the indicator line and the background is green, that's a buy signal. So yesterday at 4 a.m., before the U.S. market crash, I start trading right around 6. So we got in let me see what price I got into Euro Yen. We first shorted Euro Yen at 130.79. So 130.79, and you can see that, I never gratification. I never hide behind past performance. And so, this is today, yesterday, I always give reasons for why we're selling. Yesterday in the morning, let's see.
Yeah, so people learn the whys. That's important, Kathy. Yeah, that's great.
79, 6:34 a.m. with a posted chart somewhere. But anyway, it was this setup. Yeah. And I explained why. Dow, in here, we talk about how we can look at the ECB is one of the most dovish central banks. Eurozone PMIs were lower. Drop in stock futures is negative Euro Yen. We had a zip sell signal in Euro Yen. So we had the
Where do you get Zip Trader? It looks like you're using TradingView, but is that your own indicator that come with the software?
It's our proprietary indicator.
Okay.
And it's available for anyone who's a member of BK. Okay. So anyway, back to what I was saying. We had stock futures down. We had that ugly, quasi-ugly NFP number on Friday. So we knew that the markets were kind of a little antsy. And we had the ECB, one of the most dovish central banks. We had the zip sell signal at 4 a.m., came in at 6:30 and sold it at 130.79 and then rode this move lower. Kiwi Yen with the same setup right at 6 a.m. If you look at the bottom of my TradingView screen, you can see right at 6 a.m. we had a zip sell signal, and we rode that move lower as well. And dollar yen wasn't the cleanest trade because 6 a.m. we had already had the doubles. I love these double zips signals where we had more than one zip sell, and then at 6 a.m. we were right over here. So we sold, pretty much right after the candle opened. I would say somewhere probably around 115.50, and we saw that move. So we had
great. Yeah, you had a great day. What do you make of this retracement and recovery? Is it setting up a failing rally? You're looking, what's Zip telling you to do now? Nothing?
Well, right now I'm short Kiwi dollar.
Okay.
I've got zip sell, 4 zip sell signals. I'm short Kiwi dollar. And, I think that it's going to continue to move lower. Earlier today, I was short Aussie CAD. And, I closed half of the position. We're also short Kiwi CAD. So very simple. I don't even need to, I don't even need to explain all the reasons why I'm getting into this trade because you can see that the setup was there. Triple zip sell. So we shorted Kiwi CAD, we shorted Aussie CAD, closed those. I'm currently in a short Kiwi dollar trade. Okay. Now, in terms of the US dollar itself, the dollar yen is a tricky one because we still have the background being red, which, we want to see it turn green. But there's a very good chance UCPI tomorrow is going to be strong. We already have U.S. yields. If you look in the upper right-hand corner, 10-year rates, I heard you talking about it earlier. They were negative at the start of the morning. They were down. Now they've turned positive. So that combines with my fundamental view that that US CPI is going to be stronger. The dollar should be stronger. Suggests to me that this trade could work. Now, there's one additional wrinkle that I look at, which is that we're going to look to see if we have what I'd like to call moving average clearance, meaning that we don't have any moving average barriers ahead of us. So in the daily chart, that's great. We're above all the major moving averages. That's what we want to see.
Great point.
4-hour charts, we're touching, but we're trying to break it, right? We're touching 50-20, we're trying to break it. 1-hour chart, we still got resistance at the 100. It still looks like it wants to break it. Not the perfect setup because we are buying into some of these moving average resistances. So the question is, where are we not? So if I'm bullish dollars and I'm looking at euros, let me just fix my chart here. Nothing going on in euro. I want to tell you that I'm bearish euro dollar just because fundamentally ECB is one of the most dovish central banks.
Got it.
US yields are up, blah, blah, blah.
It's done nothing.
We're rejecting the 50 SMA. So it's looking
For
pretty.
the prisoner formation.
But I don't love this. I don't love that we're, above the 20, 50, 100, 200 on the 4-hour chart. So that's why I've chosen Kiwi. Kiwi, if you look at the 4-hour chart, we're below all of the major moving averages. We've got, these
clearance
averages, crossing lower.
Moving average clearance. I learned a new terminology, technical term from you today. I love that.
Really? I think I have a lot more to learn from you, Dale.
Yeah, I didn't know an old dog could learn something new, but that's pretty good. I like that. Moving average clearance. Okay.
So 1-hour chart, we've got moving average clearance. 4-hour chart, we've got moving average clearance. Daily chart, we have moving average clearance. That's why I'm in the Kiwi dollar trade. I also like the Aussie trade. I actually like the Aussie story more than Kiwi, but for whatever reason, Aussie was stronger than Kiwi today, probably because we had a strong retail sales report from Australia. But we got moving average clearance in the daily chart. We've got, and this is another reason why I went short Kiwi and not Aussie, because we're above, we're touching the 200 SMA. And so we do not have moving average clearance. So if I were to choose to buy dollars ahead of US CPI against some currencies, these are this is the type of thought process I would go to. I'm not saying that I don't like selling euros. I still very much like selling euros. I think it's a low risk bet, because I think that if you got your stop at 113, like 57 or something like that, which is basically above today's high, you're good. So that's not that many pips. And I think, fundamentals suggest that it should move lower, but it just doesn't have as great of a support as some of the other setups.
Do you have any clarity in metals? Do you trade them, precious metals?
Yeah, I'm in gold. We actually launched a gold channel. I've been beta testing gold all last year. And we launched a gold channel officially for our BK members. I've been sharing trades throughout 2021. And last week, we had a brilliant week. I mean, look at this. Zip sell signal giving us beautiful trades here. Zip buy signals giving us beautiful trades here. Zip sell signals giving us beautiful trades here. This morning, I caught only my first target in the zip sell because it dropped to my target and then U-turn and stopped me out. So the question now is, what do you do? Nothing. I mean, where are we in the gold chart? Right now, it's already broken higher, and we're just kind of in the middle of the zone. Like what I want to see is either we drop back below the indicator line and it turns to a white candle again, and then I sell, or we get some sort of, or the moving, or the move catches up and we get a buy signal at some point. But right now, at least on this chart, Zip tells me to decide. If we look at the traditional charts with the moving averages and the daily chart, higher highs, higher lows suggest that gold should rally. But we've got, we're stuck between a lot of different levels. And I'm still bullish dollars, which,
right,
is not good for
Doesn't that imply there could be one more washout under that low at 1750 or 60?
Yeah. And so right now, my strategy tells me to stand aside, and also the technicals and that's how it keeps me out of bad trades, because the technicals and fundamentals are not in sync. The fundamentals are that, at least from my perspective, US CPI should be stronger, reinforcing the case for Fed tightening, and maybe even building the case for a March hike, 4 hikes. And technically, though, we've got higher highs, higher lows, which is a bullish signal. So stand aside for now.
That's, and that's so important, knowing when to do nothing. Okay. So, because people always feel like they have to be in.
Right.
I think that's a great teaching.
It's a really good point, because not taking a trade is almost sometimes, and not taking a bad trade is almost as good as taking a good.
Oh my God. You sound like I've said that. I say that all the time, and people don't notice it because it doesn't show up on the P&L that they missed a bad trade. But it's just as important as a winning trade or more. Any view on crude? It's been one of the commodity markets that continues to, after the debacle last year, we had this initial break from the highs at 85. Is this a rally to sell, or are we going to new highs? What's Zip saying here?
Well, we don't, when I have a strategy that I launch, usually goes through a very rigorous phase of back testing.
Okay.
And before I release it. And I can tell you up front that, ZIP is not so great on oil. It hasn't passed all my tests to officially use it for our members, for the public. So I would take it with a grain of salt. I mean, ZIP says we're still in the buy zone. It says that we're still oil is still bullish, which is true too. If you look at the general trend of oil, it still looks like it's pretty bullish, but we've got 80 as a key level. I mean, it's a level that's kind of struggled to break. I think it's going to continue to move higher. I think there's still a lot of underlying forces that could drive oil higher, but oil, I don't trade oil. I only use oil as a guide to trade the Canadian dollar.
Interesting. View on Canada?
They're next in line to raise interest rates. I mean, we actually made some really good money selling dollar CAD over yesterday and overnight. I mean, look at these triple zip sell signals in dollar CAD. We caught this move here. So this was our Asia session trade. So I'm still bullish the Canadian dollar. Now, of course, we just talked about how I'm also bullish US dollars. So dollar CAD is not the right trade. That's why my trade of choice in the New York session this morning was to sell Aussie CAD and Kiwi CAD. So I still think CAD's going to outperform because those labor market numbers were fabulous. And the Bank of Canada will, could very much, and I think they will, raise interest rates in Q1. But it may not be a dollar trade. I actually chickened out of this trade this morning. I was long CAD yen, which kind of moved in my direction, but I actually exited it early because I felt like stocks were going to pull back, and yen crosses don't usually perform so well when stocks futures kind of pull back. So while I was right in the stock future direction, CAD yen just continued to go anyway. So if you agree with me that you think the Fed's going to be more aggressive, the BOC is going to be more aggressive, then that's going to be positive CAD yen. So CAD yen could be a better trade than dollar CAD, along with CAD Swiss, Aussie CAD, and Kiwi CAD. So what I'm trying to say is look at the crosses when trading the CAD, because dollar CAD itself may not be as easy and as trending and as clean of a trade.
Wow, what a rundown! I'm going to have to watch the video. Because you cover the way you're able to cover so much ground in such a short period of time. Anything else you want to wrap it with? What do you think the theme is going to be for 2022? It's a new year. I think you've said it. And more aggressive Fed and higher rates are going to govern the market for at least a quarter or so. Huh?
Yes, but I actually just want to caution traders. I mean, this is what everyone else expects too, right? Yeah. I mean, so you do have to be careful because when the outlook is clear, everyone expects the same outlook. And at some point, the expectations will all be completely priced in and they'll be about something else. And most likely you will be late to realizing when it's about something else. And that is
spoken by a true veteran.
That is why it's so important to respect the technicals as well as the fundamentals. Because in that case, sometimes the technicals will be a leading indicator of the fundamentals, because technicals reflect and the price action reflects institutional flows as well. So the smart traders maybe starting to move and adjust and get in and out and move on to something else before the rest of the world and you realize that the theme and the stories have changed. And that's why I always make sure that my trades are supported by fundamentals and technicals and sentiment, because the fundamentals are slow movers. They take forever to change. And before you realize they've changed, the prices have changed. So you want to make sure that all three stars are aligned in your favor. Fundamentals meaning the big stories, technicals meaning whatever you look at. I look at ZIP, and sentiment meaning how bonds are trading and how stocks are trading.
Okay, Kathy, I want to give you $1 million to manage. Listening to I really appreciate you taking time today. You have time to show your website and what you
the other thing I want to show is The other thing that we've launched this year is crypto. And I don't know if you guys
Okay.
have crypto here.
Well, we just got a question about crypto from an attendee. So, do
So
you do
this is
Go ahead.
our dashboard, BK Crypto Crusher. And, you know, we caught the huge sell-offs and a lot that happened in crypto this week, like in Ripple.
Yeah.
We sold Ripple and we got, you know, a 5% target, a 10% target in Ripple. And you can see, if we go back to the Ripple chart, it also caught the uptrend here, it caught the downtrend here, it caught the uptrend here, it caught the downtrend here. Very beautiful setups there. And it gives you, I have a lot of closed trades already because of the big moves that we had yesterday, like Cardano hit targets as well. But some of the live trades that we have, when we have a trade, it tells you how many days the trade's been in, if the target has been hit, you get a green check mark, and what the second target is and what the stops is. So if you're looking for ideas on crypto, you know, this is something that we are rolling out for 2022. We're having a huge beta launch at the end of the month, where we're going to invite everyone to participate in, you know, helping us add bells and whistles to the site, so you can be a part of the development. So I just want to put this on everyone's radar. And, you know, January 27th is going to be our big webinar for Crypto Crusher. And if you want to get more information on it, feel free to email me at Kathy@bkforex.com. I'll add you onto the list to attend the webinar when it happens. But bottom line, Crypto Crusher, you know, a lot of our trades have been settled already, but it gives you trade ideas almost every single day. We've got, you know, custom indicator charts. And it's simple. It just gives you what you need, which is, you know, whether you should be buying, whether you should be selling, and where your stops and targets should be. I also have videos on, you know, crypto outlook, technical analysis on cryptos. You know, if I refreshed it, it actually has the most recent ones, but you know, from the 11th. And, you know, it's basically what I think anyone who's dipping their toes into crypto needs to know in terms of direction. And not only do we have the top 10, but, you know, we've got tons and tons of other tokens that we follow as well. So email me if you want to get on the list to participate in our free webinar on January 27th, Kathy@bkforex.com.
I'd like to email you and ask you what kind of vitamins you take.
I don't take any vitamins.
All right. Well, I want a blood transfusion from you. Great energy, Kathy, as usual. And you covered a lot of ground. And, you know, I hope that 2022 is a great year for you and your company and Boris and all your subscribers clean up, and that pips rain down on you guys all year long.
Same to you. Thank you so much.
You're very welcome. Kathy Lean, her and Boris, one of the best teams out there on the net, and looks like they're embracing crypto. So thanks very much, everyone, for being here on Turnaround Tuesday. Good hunting the rest of the day. You could join the team in about 25 minutes for the morning edge, and check Kathy out and listen to this video again, because if you're like me, there are pearls that you already forgot and need to be remembered. And I learned from Kathy today, moving average clearance. Great term. I'm going to steal it from her. So thank you, Kathy.
Oh, for my website, bkforex.com is bkforex.com is our website. I mean, I can just shoot to you. This is
okay.
It's our brand new baby. But at BK Forex, what we do is I have Forex trades. I have gold trades that I do that are that we post in our chat room and we email. Boris live trades twice a day, Asia session as well as the New York session, and he trades FX crypto indices live in the Asia and New York power hour every single day with our customers. So lots of great stuff going on. And you can always email me at Kathy@bkforex.com if you have any questions about anything or you need links to anything.
Boris and Kathy showed that the new math is 1 + 1 = 11. Thank you, Kathy. Thank you very much for sharing your time and your great work with us today. So that's going to be a wrap, everyone. Hope you enjoyed Kathy. Join the team in 20 minutes for the Morning Edge, and we'll all see you tomorrow. You're welcome. Thank you, Kathy. Everyone enjoyed it. All right. See you, Sinatra. Adios.